I mean, look, gold is rallying now since 2.5 years, more or less, since the triple low at 1615 in autumn 2022. And of course, you have the typical behavior. At some point, things are getting vertical and spiking, and everybody's rushing in. And of course, we also know that there's no rush like a gold rush. So gold had a big pullback the last 2 days. 3,500 is a psychological number, but I think in the bigger scheme of things, this is not an important top at all. I think we're gonna see much higher gold prices down the road. I think 5,000, even 10,000 is no problem. I'm in the three-digit silver camp in the mid to longer run, and in the shorter term, this until this summer, I would say yes, we're gonna see $40 to $50 silver. I think in my first Kitco interview a few years ago, I said $9,000, and I still stick to that.
All that glitters may not be gold, but the precious metal has been one of the few things to shine in all this market turmoil over tariffs. After peaking at $3,500 earlier this week, gold prices experienced a sharp correction, dropping to around $3,335 by Thursday. This retreat followed 2 consecutive days of selling pressure, reflecting the market's natural need to cool off after a rapid surge. Yet, despite the pullback, the broader drivers supporting gold remain firmly in place. Florian Grummes, managing director of Midas Consulting, remains confident in gold's upward trajectory. Gold at $5,000 or even $10,000 in the long run isn't out of the question, he says. Drawing parallels to the 1970s bull run, Grummes notes that markets can remain overbought for years when momentum and macroeconomic conditions align. Short-term volatility is part of the game, but I believe this rally still has a long way to go. Part of the recent turbulence in gold prices stems from renewed geopolitical tensions. Late Wednesday, U.S. President Donald Trump hinted at imposing new tariffs on China within the next 2 to 3 weeks if trade negotiations stall. In response, China has clarified that it will not return to the negotiating table unless existing tariffs are lifted, highlighting the ongoing standoff between the world's 2 largest economies. These developments have reintroduced uncertainty to global markets, reigniting safe haven demand. Gold's sharp drop from $3,500 has triggered short-term sell signals, but analysts caution against reading too much into the correction. With major concerns, such as geopolitical instability, stock market volatility, and fears of a recession, still very much in play, the longer-term case for gold remains compelling. Grummes adds that temporary corrections can be constructive. A pullback like this isn't unusual considering the recent rally's strength. It allows the market to consolidate before potentially moving higher again. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think it's short-term profit taking. I mean, 3,500 is a psychological number. I think I had a price target also around that area. Look, of course, gold is very overbought on all time frames. So I would not necessarily recommend to run into the store right now and buy gold. It's very overbought. But at the same time, if I look around and listen to most of the people, everybody is basically expecting a big pullback. And I don't think it's going to happen. I mean, can it pull back from 3,500 to maybe 3,000? Yeah, that could happen. It looks like in the very short term, if you want to know more exactly, it could be a head and shoulders kind of topping formation building here. So if gold is not able to get back above 3,370-ish, then there is room probably towards 3,070 on the downside. So that would be probably $200 from here. But I mean, this run up has been so crazy over the last 2 or 3 weeks. I think it would be totally healthy and good if it pulls back and takes a breather here. I've been saying again and again, especially in the last few weeks, that as long as silver doesn't show up to the party, I don't think that we've seen any important gold top here. And I still believe in that. Silver has been only following gold so far. Gold has been on its own. Yes, the general stock market has found a low 2 weeks ago. We've seen, I think the VIX hit like around 60. This is, I think, 5 times in the last 35 years, we've seen these extreme fear kind of readings. So most likely this correction is done for now in the short term, and the markets will recover. So the stock market will recover, and Bitcoin, crypto will continue to recover. And of course, if you look at money flows and liquidity, maybe that's enough reasons for gold to maybe consolidate sideways above $3,000. But again, I mean, that's what we've seen over the last 2.5 years. Gold never came back really big time. It's been mainly, if there was a pullback, it was consolidating sideways over time, and then it basically just collected some energy and steam again to run higher again. So I don't think that this is a big important short-term top here. Again, I wouldn't be surprised if gold can hold up above 3,000 in the next few days and weeks. Maybe if silver really takes over now, it doesn't even go that low anymore. We have one open gap, I think around 3,175-ish. There's a little gap. Usually these gaps in 80% of the cases are getting closed. So that's maybe a number to keep in mind. But overall, you see these crazy moves. I mean, it's up $100, $200, then it's down $100. You have to be really with very cool, strong nerves if you are a trader in these markets. But of course, at the same time, huge opportunities. And for the physical, again, I said it before, if you hold physical gold and silver, there's nothing to worry here. In fact, it's great times. I mean, look, gold is rallying now since 2.5 years, more or less, since the triple low at 1615 in autumn 2022. And of course, you have the typical behavior. At some point, things are getting vertical and spiking and everybody's rushing in. And of course, we also know that there's no rush like a gold rush. So here we are. Gold had a big pullback the last 2 days. 3,500 is a psychological number, but I think in the bigger scheme of things, this is not an important top at all. I think we're going to see much higher gold prices down the road. I think 5,000, even 10,000 is no problem. From the 70s, we know that gold can run higher for 2-3 years and can remain and stay overbought and people just running behind the train. So it seems like we could be in a scenario like that. Of course, we see $20, $30 drops in 5 minutes, and we can see $100, $200 drops in a day. But overall, the trend is very much intact. I would be surprised if gold comes much below 3,000. I think that's probably already the worst case. $4,000 is possible. I mean, you've seen how things have been accelerating the last few weeks, and I don't see that this is anytime soon really stopping. I mean, quite the contrary. I mean, now it looks like silver has entered the dance floor and probably will pull back gold higher as well.
While gold continues to capture headlines with its record-breaking rally, silver is quietly gaining ground, steadily holding support and signaling a potential breakout. Over the past year, gold has surged by 42%, while silver has climbed by a more modest 21%. Yet many experts believe silver's real move may still lie ahead. The $35 level has long been silver's psychological and technical barrier. Once this level is breached, the market often experiences a sharp rally driven by short covering and speculative momentum. In previous instances, silver has even attempted to reach the $50 mark shortly after cracking $35. Now, analysts are watching closely for signs of another breakout. Florian Grummes, managing director of Midas Touch Consulting, believes silver is on the verge of a significant rally. "I'm expecting silver to reach $40, possibly even $50 by late spring or early summer," he said, pointing to technical patterns and market sentiment that suggest the setup is finally in place. Financial educator and best-selling author Robert Kiyosaki, known for his book Rich Dad, Poor Dad, has also thrown his weight behind silver. In a recent post on X, Kiyosaki called silver the biggest investment bargain today. "Good news for people with not much money," he wrote. "Gold has already hit all-time highs, and silver is still 50% below its all-time high. I believe silver will 2x to $70 this year." Let's get back to the interview.
Usually, once a market is freed from the weak hands, then these rallies can start. And I believe still what I've been saying now for a few weeks and months, that silver will show up and we're going to see prices around $40, maybe even $50 by late spring, early summer. Okay. And I think everything is on the table now. And today was the first day where you've seen gold acting rather weak, correcting, and then silver took over and basically helped gold coming back on its feet, more or less. But silver took over and showing signs of life on its own. And that's very important. And I think that can continue dramatically over the next few weeks. So my money is on silver now. It's extremely undervalued, like you pointed out. The gold-silver ratio above 100 is basically a joke. I mean, we know that in the earth it's 10 to 1. I had been speaking with Keith Neumeyer a few weeks ago, and he mentioned that basically in their production it's like a 7 to 1 kind of ratio. Yet the market is trading at above 100 to 1. So silver has a lot of room to catch up here, and I'm not telling anything new, but we all know it's one of the very few commodities to trading below 1980 high. So I'm in the 3-digit silver camp in the mid to longer run, and in the shorter term, until the summer, I would say yes, we're going to see $40 to $50 silver. We've seen a top at $50 in 1980. We've seen a $50 top in 2011. So technically speaking, this $50 level is strong resistance. It's also a psychological number. So if the market would rally up to that number, you would expect a pullback again, right? Maybe back down to where we are trading right now, or maybe 35. But then again, I mean, things are escalating and accelerating. And it could also mean that silver just breaks through that $50 and runs higher towards maybe $90 to $100. I mean, it's on the very long-term chart, silver has this huge cup and handle pattern, like the last 45 years. And on a linear chart, we're not talking, I mean, on a linear chart, the last 45 years, the depth of the cup points to $90, $95. So I think silver can easily double, triple, quadruple from here. But given the fact that $50 is a resistance, I think I'm still conservative if I say I expect $50 by the summer.
As volatility grips global markets, precious metals continue to command attention for their resilience and strategic positioning in a climate of rising uncertainty. While gold's pullback from its recent peak may appear alarming to some, seasoned investors view it as a natural pause in a broader uptrend. Silver, often the underdog, is emerging with renewed strength, drawing attention from analysts and financial voices alike. Both metals appear poised for renewed momentum, with technical levels approaching critical thresholds and macroeconomic pressures still unresolved. Could silver finally step out of gold's shadow and lead the next leg of this historic rally? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.